Hello, everybody. This is Paul Hirschenberg with Hirschenberg and Stone-Walsh Insurance Services. Today, we are talking about MLR rebates. And as always, I'm joined by Rory Stone-Walsh, my business partner and employee benefits manager. Rory, can you kick us off by telling us what an MLR rebate is?
Yeah, sure. MLR stands for Medical Loss Ratio, and this was established in 2014 with the Affordable Care Act. And basically what this is it's a rule that, or a law, that for every dollar that the health insurance carriers make, 80 cents of that has to go back has to be paid in claims. If they pay less than 80 cents on the dollar, then they would need to refund or rebate their customers.
So that rebate, is it, because most of our clients offer more than one health insurance plan. Is that rebate based on one plan, or is it based on the employer?
Yeah, so it could work either way. So what we've seen it both ways. So sometimes it's based on one specific line or policy, or sometimes it can be based on all of the health insurance policies.
Right. So can the employer just cash the check and keep the money?
Yeah, that we wish that could happen, because that would make all of our lives easier. We wouldn't be making this video if that was the case. The only way you can do that is if you truly pay 100% of the employee of the entire cost of the health insurance. But what we find is about 99% of employers don't do that. So if any of the employees pay a portion of their health insurance, then yes, you would need to rebate them the percentages, the accurate percentages.
So how does the employer figure out what that percentage is and what they paid versus what the employees paid?
Yeah, so that's really the $1 million question as well, because that's the one that's gonna take a little bit of time and research. So basically, the main part that you want to do is you want to find out what the overall percentage of what the employers paid versus what the employees paid in health insurance premiums.
So can they just reach out to like their CPA or bookkeeper to help them figure that out?
Yeah, generally what we found is that, a lot of times there's going to be some sort of QuickBooks or some sort of records that you'll keep of what portion you've paid in health insurance premiums for the year. And then you can take that and find that overall percentage of the total premiums, and then you can kind of work from there.
So if an employer has, say, 10 employees, do they all 10 share that money equally, or is it based on the amount of premiums? So if somebody has their family on the plan, do they get a bigger share of the refund?
Yeah, so that is a good question, and that is true. So you can we don't want to tell employers what to do, but generally the most fair way to do it would be if an employee paid employee only rates and we had an employee that had employee family, they're going to pay a much larger percent of the premium. So what they would naturally be entitled to a higher refund.
So what are the options for the employer to give this refund to the employees?
Right. So there's two main methods that we've seen over the past years that employers do. So the rebate is generally for the year before. And so what you can do is you can go back to the year before and try and look at all of the people participating in your plan in the year before, and then distribute that refund to all of those people. Now, the downside to that method is that typically some of those employees may not be around anymore. So you got to go find these employees, track them down, and get an address, and then mail these checks to these employees that may not, or to these former employees. And a lot of times these checks might not be for very much money. So it can be a lot of work for not necessarily a large rebate or refund that you're sending these past employees.
So truly there has to be an easier way.
Yeah, so the way that we've usually done it in the past, and the way we've seen a lot of our clients do more often than not, is they take a snapshot of their current employees on the plan, and then they just basically do the same. They do the percentage breakdown of their current employees and issue the rebates to their employees via payroll deductions, which is lessening their insurance premium deductions for maybe one or two payrolls.
So what's the downside of doing it that way?
Yeah, so the downside is there's two downsides that we've heard of or seen. The first downside is you got to babysit your payroll. So number one, you've got to adjust your insurance deductions for one, maybe two payrolls. And then you've got to remember to turn them back on, or to get those insurance deductions back correct. And so we don't want you to forget. So that's the first way. Sometimes employers forget. The second way is it might not necessarily be the most fair way to do it, right? So some of these employees that are on the plan this year might not have been on the plan last year. So you're giving money back to employees that might not have necessarily earned that rebate.
And I know I've gotten a few calls this week from former employees of our clients who actually got a letter from the health insurance company saying that employer had gotten a refund and those employees kind of wanted their share. So you're saying under that second method, giving it to the current employees, you might be, former employees might not be too happy with you. Is that correct?
Yeah, right. And I think that's, unfortunately, I think you want to try to be as fair as you can, but also we understand that there's a lot of administrative burden that you're putting on your staff to put these refunds together. And it may not be administratively feasible to get these refunds out, especially when you start looking at sometimes they're $3, $4, $5, and sometimes that just doesn't make sense. But yes, we have seen that in the past where former employees can get these notices and may reach out, but legally you do not have to send it to them if you do the current snapshot method.
Perfect. So how long does an employer have once they receive the check to give the employee's portion back to the employees?
Yeah. So once they receive the check, they've got 3 months for when they receive the check to get that rebate back into the employee's hands. So
they definitely have some time.
They have time, but we generally recommend try to do it sooner than later, because we all know that with these rebates generally come in late September, the holidays come, and before you know it, you forget about it. And then long story short, you didn't ever give the rebate back. So we definitely recommend doing it sooner than later.
Perfect. So if any of our clients have any questions about the MLR rebate they just received, can they reach out to you?
Of course, they can always reach out to us. We're happy to assist in any way.
Perfect. And we will definitely put Rory's contact info on the end of this video. I'm sure that most of you already have his contact information saved on speed dial though. So anyways, everybody, thank you all very much for listening. Rory, thank you very much for joining us today. And obviously, once again, if you guys have any questions, please feel free to reach out to Rory. We are definitely here to help. Have a great day, and we will talk to you soon.